If you've lost money with stocks or options, this video will show you why you lost and how to have better success next time. If you're a real-time subscriber, thank you. Otherwise, welcome to Stock Charts Trading Weekly Indicator Alerts Review, where we highlight different indicators giving you the best tips and tricks every week. This week's review, what is option implied volatility? Implied volatility is the measurement of premium on an option. In this review, we're going to be using Thinkorswim. Using the Thinkorswim Beaker tab, click on Edit Strategies, double-click on Implied Volatility, and it'll upload to your charts. Click OK, and implied volatility will come up on the lower portion of your charts. And remember what we said, implied volatility is the measurement of premium an option will cost you. If implied volatility is high, the option will cost you more money. If implied volatility is low, it will cost you less money. Implied volatility will never go negative. That would mean they're paying you to buy options, and you'll hardly ever see it near zero because the market makers want to make some money. Let's say you see a homeowner who wants to sell his house. You think home prices are going up, so you ask him to do a lease option because you don't want to give him his full asking price of $250,000 out of your pocket. You give him a smaller amount of money, and he gives you the option to buy his house at $250,000 for $10,000, which will expire in 6 months. You now have control of the house that you have to sell within 6 months to make a profit. You sell the house making a profit, never really owning it. So let's review the numbers. The homeowner wanted $250,000 for his house. You didn't want to spend that much money, so you offered him $10,000 on a lease option to have control of a $250,000 asset. Your aim is to sell the house for $300,000 to make a $40,000 profit on a $10,000 investment. Instead of laying out $250,000 to sell the house for $300,000, making a $50,000 profit, only giving you 20%. With the lease option at $10,000, you were able to yield a 400% increase in the value of your money. The reason I showed you the example of the house is because the negotiation between the homeowner and you, every aspect is really negotiable. The price of the house, the price of the option, and the price that you sold the house for, giving you 3 areas where you can change and negotiate the value to increase how much money you make. But that's not the case when it comes to stocks. But in the stock market, you have buyers or sellers on one side and buyers and sellers on the other side. Instead of negotiating directly with the opposite side, you have market makers deciding the value of the options. But really, because they're getting in the middle of the deal, market makers are creating risk and taking profits. If you want an in-depth video, screenshot this and go watch it later. Understanding how market makers operate is the key to understanding how to make profits in the market. When you can find the implied volatility really high, like this one at 1.75, and the stock low, that's a good indication that it's about to reverse and increase in value. A couple things to notice was there was an earnings release right when that implied volatility was really high and the stock was low. And remember, the option makers are in the middle of you buying the premium of these options, which they were charging you a lot of money. And as the price shot up, they deflated the value of your money, option premium, by 83%. But that would not affect if you would have bought the stock here, going up 100% in just a month. Putting the pieces together between the option makers' implied volatility and your trading strategy is the key to your success. Just because implied volatility is high doesn't mean it's a buy, because price is also really high. You have to get them to match. When price is low and implied volatility is high is indication, but not perfect, where price will move, in this case 100%. When implied volatility is high, it's time to buy. But of course, don't go out and just buy anything with high implied volatility. Set up some rules. You'll find a lot of high implied volatility stocks in percent change gainers, like pharmaceuticals. This was almost 2% implied volatility right here before the stock shot up. Market makers took all that premium away from you in the tune of 65% as the stock increased 85%. Great for stocks, bad for options. Another time you see stocks with high implied volatility is when they're fairly new to the option chain. As you can see, there's no implied volatility back here because the option chain started in April. High implied volatility as price came down, up over 60% from the bottom. Here we are with high implied volatility right before earnings release and a downward market, big pop to the upside in the tune of 50% as implied volatility fell off 30. Now, when implied volatility is low, watch out below. As we see implied volatility hitting off of these lows, not zero, it's still 0.4. We can see the stock at highs before it sells off and implied volatility goes up. When implied volatility is low, watch out below. You can see this stock sold off hard right after the implied volatility went below the support level. Implied volatility is low and the stock's low, but it still goes lower in the tune of 60%. So when you use implied volatility, it's like reading the mind of the option maker. If it's high, he thinks it's a good buy. That's why he's charging you more money. If it's low, he thinks the stock's going to go lower, and that's why not many people are going to buy the stock. If you look at Google Trends, shorting a stock versus buying a stock, you can see buying a stock has a higher volume, letting us know more people want to buy stock than sell it. So option makers know when price is low, more people want to buy that stock. That's the time to raise the premium on the implied volatility. Now, the VIX is the mother of implied volatility. It tells you what the broader markets are doing. One way you could set this up is use your trend indicator. Under the globals tab, make your lower band red, your upper band green. Make sure your channel width and bandwidth are both 105. Along with the implied volatility study, save the study set to VIX and only use it on this chart. This will give you a quick indication should you buy or sell. If the VIX is low, watch out below. And we can go back and test all of these times when the VIX is low and under the trend indicator midpoint, which you can see is right now telling us to short the market, along with implied volatility being much lower than normal. Just to confirm what I'm saying is correct, let's look at mid-March and see what happened to the market. Here's mid-March on the Dow Jones Industrial. We can see the implied volatility is low. Price was in a downtrend going lower. And from here, we can see price sold off lower. That's a pretty good confirmation. So let's take all this information and combine it together to give you a trading strategy that make you successful. VIX 2-year 2-day, the trend indicator showing that the best positions for us to take right now is shorting, along with the implied volatility says to short the market. For this, we're going to use our bearish flag studies, where we use different bearish flag lengths, the divergence, trend indicator, the volume profile, and of course the lower implied volatility study. We're going to run a search on the triggers that I have saved, and this is the reason that they're saved in triggers and not a buy now. As you can see, the implied volatility is not as low as it should be, meaning this is not ready to trade, along with the price action isn't all the way up against the resistance level. Here we can see the trend indicator going sideways. Price is up against resistance, making a W pattern, along with the divergence. It's higher than the volume profile, but the implied volatility is not as low as it could be. On to the next trade. Same look, trend indicator going down. We have lots of resistance, along with the bearish flag. Price is above the volume profile. If you haven't seen that video yet, go back and watch it. But the implied volatility is still a little bit high. I like it better when you're up against resistance and the trend indicator is going lower and implied volatility is bouncing off a support level, like it did with Walmart, making a huge increase of profits. As implied volatility reached the top of the resistance on the implied volatility chart and price came into support, that's the place to take a target. Remember, option makers want to sell high premium here when the stock is a low price because they know buyers are going to come in and buy this up. Then as normal, they sold that premium off, taking the money from the value of the options. So let's look at some trades that are set up for right now. WDC 2-year 2-day. We can see the trend indicator pointing down. We have 2 points of resistance, confirming the trend indicator resistance. At the same time, we have a diagonal line support on the implied volatility, along with a horizontal support, giving us a low premium value on the option to buy. As price goes lower, the implied volatility price will be added to us, giving us more value on the puts. VMW, trend indicator going down. Resistance, 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 along with the volume profile resistance. We have horizontal support on the implied volatility and diagonal support at a very low 0.23. Just a couple days ago, it was all the way up here above 0.50, decreasing in value over 61%. This means this is on sale. Goodbye for you. As price comes down to a support level, the implied volatility option premium will go up, giving you more value. Next is TAN, trend indicator going down, volume profile resistance, implied volatility horizontal support, implied volatility diagonal support. Great place to buy a put as price goes lower. Premium will go up, adding value to your puts. Looking at T, we can see that the implied volatility was really low last time we were up against resistance. Even though it's a little bit higher, it's still up against resistance, ready to take puts lower. Confirmation by the divergence, also the bearish flag, trend indicator going lower, along with volume profile resistance and low implied volatility at support is a great buy. As price comes lower to support, right before this earnings release, implied volatility starts to go up, adding value to your puts. We can see here, implied volatility went up before earnings, and again, and again. Once you learn this, it happens like clockwork. Monster, trend indicator going lower, volume profile, overall resistance, implied volatility, both horizontal and diagonal support. And that's the way to trade market if you're a swing trader. If you're a day trader, you might want to use a little bit different strategy. Using the VIX to confirm the direction of your trade, because it's in the red bottom side of the trend indicator, you'd want to look for trades to short. Along with implied volatility being low, trades to short. Using whatever time frame you're comfortable, maybe it's the 5-day, 15-minute, you'd want to find trades to short. Like when the divergence or the bearish flag or price is up against the trend indicator, along with low implied volatility, take the trade lower. As you can see, this little move lower has forced the implied volatility to rise. The lower this goes, the higher the implied volatility will go, making you more premium. Trend indicator going down with divergence and bearish flag, implied volatility was lower. Great place to buy puts as the market closed. Opening up, going lower by 2% today with anticipation that the implied volatility will rise. In this case, you can see that the bearish flag up against the trend indicator, along with implied volatility, was very low, gapped down this morning and kept moving lower. Same with Oracle and over, because stocks are dictated by the VIX and the implied volatility. It's all on getting in the mind of the option makers. Here's a trade setup I took this morning. IBM 5-day, 15-minute. Implied volatility was going lower. This morning you can see that the implied volatility bounced higher. At the same time, the stock price was going higher, giving me a great place to buy the bearish flag up against resistance with the volume profile indicating a pullback. I'm looking for this trade to go back down to the support level, or I'll take profits when the implied volatility hits this resistance line. Either way, it's a win. If you're watching this video real time, take the weekend to make a plan, formulate how you want to strategize your money, proper money management, and we'll see you next week to review more tips and tricks on how you can make money in the market. If you're watching the delayed version of this video and you see all the amazing results and you want to get in on the weekly subscription, go to stockchartstrading.com and click on indicator alerts. I wish you all the best success in trading.